Hello friends. Today I thought of doing a short video on zero DT SPX trade, right? So S&P 500 zero DT trades that I recently been doing, and I thought share my experience and what I've been doing so far, and success, failure, and whatnot, and kind of strategy that I follow, right? So first of all, zero DT option trades on SPY or SPX or any individual stock is very very risky because zero DT is a same day expiry trade, so you don't have a benefit of theta, you don't have time to adjust your trade, you don't have any control. So if things are either positive or negative for you, so I don't often do it and I don't take a lot of risk. I typically do on a very rarely, and I'll tell you when I do it and when I don't, and also only with a very little money, right? So just to word of caution from my side is that my personal experience is I don't want to do it unless it's makes sense for me to do it for a lot of criteria has to meet, and then only short amount of money that I probably would be okay losing, right? So with that, let's get into it what I've been doing, right? So I do start before even the market open. I want to see what's the pre-market is doing, what's up in the market, what's down in the market, like overall market health, whether it's a SPX, S&P 500 index fund, how it is doing, or Nasdaq, what it's been doing. Like I take a quick look at the pre-market health check as I do that like almost like every 5 days a week, like every day trading days. So I also see if there is any big event, whether it's a macroeconomic or microeconomic event that kind of has impact on the market, that could have impact in the market. Like for example, some tariff announcements coming in, or today there's a job data coming up, or to nowadays like rate cut announcement, FOMC meetings, all of these things, or I don't, or maybe AI, some news like people are not happy with a lot of capital expenses on AI stocks. So S&P 500, which is cap adjusted, which means like lot of heavy lifting tech companies that are trillion-dollar companies are actually overpowering S&P 500. So if the tech is down, big techs like Microsoft, Nvidia, Apple, those stocks are down. Most likely S&P 500 will be down, right? So I take a close look at those news and all that. So with that, if I see like okay, no, market is relatively bullish, it's going in a positive directions, and it is like no big news coming in to tilt the market in either side, whether it's a very positive side or very negative side, it doesn't matter. I just be careful about anything that is highly volatile that's going to happen that day. So before the day before and the pre-market, I kind of try my best to kind of uh, inform myself with the some kind of trigger or impactful events and all those things. And with that said, like if something is very normal and maybe we would see some positive movement on the S&P and maybe slightly negative, or maybe it will just capitulate where it is right now, then I probably those days I can try to do some kind of um, uh, zero DT S&P 500 spreads right now. There is two sides. One is the bearish spreads or the bullish spread, right? So I typically 9 out of 10 avoid bearish side of trade, unless the event tells me that yeah, it is going to be bearish today. Some bad news came up and all those things, like job market data, job report didn't go well, or inflation went up and all those things. I typically avoid any bearish trade. I tend to be bullish, and that's probably me. I'm overall bullish in the market pretty much most of the time, and definitely this year. So I'm very more careful, or not even try to be on the bear side of things. And also personal experience. I had tried to be put a beer call spread, like short call spread, but I burned myself. Those are the days like mostly I made loss. So I saw like, out of like 100 trades of 0 DTE, I may be 70% bullish, 30% bearish, and 30% bearish. My 90% loss or 80% loss days are on the bear side of things, right? So market is, last couple of years, we see that positively market is going on the uh, 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 favors the bulls over bears, right? So that is one other thing that I want to share. So coming to this Thinkorswim platform, so what I do in the morning, right? I just let's see the market is open and it's up, couple of handles or a couple of candles that are up and down. I just come here. I say, okay, let me see the all different spreads, and I typically go to the put side first and see, okay, you know what? So let's go to the chart first and see, okay, you know what? This is the chart doesn't look that bad and it's going well. And let's see if I do like 1 year, 1 day, 5 minute chart, and it's let's say started here like what 6,865 or something, and it's kind of positive candles, some negative, some positive is happening. Like I wait for a couple of candles, see the trends, this side, or maybe it's open here and then it's going down on that side, right? So I kind of see where it is going in a couple of candles, wait for that, and don't wait too long, but maybe few candles, maybe 15-20 minute, and then I make a mind of mine, and that's kind of something that's happening in my brain by looking at the chart and the candles, the direction that's moving, all other things happening in the market, like quick news, feed that I read and all that. So now say, let's say I want to put a short put spread on the bullish side, and I choose a kind of like where I should put that trade, right? So let's go and see the delta. So let's say I'm going to do that on Monday, right? So today's the weekend, but let's say the Monday, this would be Monday close. So basically a 0 DT, because this will be placed on Monday and close on Monday. So it would be 0 DT. So I go to like maybe around, so how I came up with these things, of course, from experts that are doing this, that are like doing option trading for decades, and I kind of trust them and see what they are suggesting and all that. And I've seen some experts that I follow, that I trust, and they are suggesting like 34, 35, 35 for the short put of the side, like a sell here, and all that. But I be a little more conservative, and I don't do 35 delta. I do like 25, 20, between like 25-ish delta. So let's say I choose this 24 delta, and then I sell that 6840. So sell 6840, and then choosing the long put leg of the spread, and that now depends on the how much risk that anyone wants to take. I don't go more than $10 wide, because that means like maybe $800 loss or something that max can happen. And I don't, I mean, of course, like $10 means $1,000 widespread, and I don't want to lose more than $1,000 definitely on a single day, doing something that is very risky, right? So of course, and I don't have any time left for me to do anything to save, right? So I don't ever do more than $10 wide, but in some days I only do $5 wide because I'm not feeling confident. It's something that happens, in my brain, and the news that kind of gave me that bias, whether it'll take more risk or not. But let's say I take $10 risk that day, and I buy 6830 here, which is kind of like a 18 delta. But this is not important to me. The important is here that this is my risk. I don't want stock to S&P 500 to be below 6840. And this is the delta that is most critical for me, right? So, and that this width is about how much risk I want to take, how much confidence I have, and all that. And as I said, I never do more than $10 wide. And so let's say I do $10 wide, and I buy this. So as I see here that I have $150. So basically now, people can do more than one. They can do 10, they can do five, whatever they want, that much of risk that they're going to get. But this is pretty much, sometime I do two, not more than that. So that's putting me at 10, 20,000, sorry, $2,000 at risk and $300 profit. So it depends how much confidence I'm feeling. And, if there is all great news coming in, FOMC meeting is hawkish, or dovish, or job data came well, or inflation went down, all this good news, then probably, yeah, I can do a little more. But typically this is kind of like spread, right? So what I do, like, okay, like, if you see here that your uh, break even is 68.38, but basically you are looking for stock not always stay above 68.40, right? This is the break even where you start making loss and not any profit, right? So that doesn't matter to me. I always be careful about this number 68.40, which is the short leg of the spread, and max profit 150, max loss 850, so below $1,000. So that is within our my tolerance limit of the loss, and I place the trade. Now, if I come here and do the analysis of the trade and go to the risk profile, and I see that my it's very simple, right? It's $150 max profit. Stock has to stay above 68.40, and whatnot, right? So this is kind of like a trade that I do every day. I talked about the delta that I choose, why I choose the delta, why mostly on the bull sides than bear sides and all that. But that doesn't mean sometimes I do feel overconfident, and I do on the bear side too, something like, but for that I have a separate strategy, and I wait for like stock to like really move high, and then try to cool down and see couple of wait for, like, for example, here on Friday to end 68.95. I was thinking like, okay, do we make like mental 7,000 or not? Like, but it looks like, after a couple of candles, I can see after this is a 5 minute chart, so each candle is 5 minutes. So I see that, no, it probably is not going to go 7,000 today. So I probably feel a little bit confident here, and the big red candle here, I say, okay, probably it's not going to go up. So then I come here and say, okay, I don't see stock, S&P 500 going above 7,000 today. So what's that deal going to be? Like, come here and see, okay, um, I think I did on Friday. I think I did 69.95. So that's what I did. And then 69.90. So like, it on the bear side, I took $500 risk, right? So yeah, so I think I bought I know this was not the value, right? That day is a different dollar. But anyway, so I did like, I bought 69.95, I sold 69.90. So let's do this and do this. Yeah, so this was like $100 or something that I got, because market was already, option price was going down for stock moving above 16.95. As you can see in the chart, it failed from 16.95. So basically what I did is not this one. What I did that is 68.95. So 68.95, yeah. So I was here. So 68.95. So I bought 68.95 and I sold 68.90. And I got, I think on Friday around this time, which is 9:50 Pacific, 6:50 ish Eastern Standard Time. It was like a dollar that day. So I got a dollar. I put that trade, right? So okay, so for the delta side, I don't know. That day I was not focusing on the delta, but delta was like 30 and 25. So again, okay, so on the long side of the call, I had 25. So basically same strategy. right? On a put, the short side was 25 delta. On the call side, bear call side, long call on the 25 delta. So same strategy, similar for the delta perspective, same strategy. But I was focusing on like, I was like, okay, I don't see stock going above, 68.95 for the day. So I took that risk, made that trade. So $100 here and probably $160 on the put side, kind of like creating an iron condor, and it made $260 and change. So that is what I have been doing for my trades. I just wanted to, show you guys what I've been doing and how uh, some strategy works, some strategy doesn't work. But this is what I've been doing if I do day trade pretty typically. So in summary, on the mostly on the day that is not heavily impacted by any news, whether it's positive or negative, excuse me, that creates high volatility. Stay on the market on the bull side more than bear side. Select a 25 short put, not risking more than $1,000. So basically $10 wide put spread. You feel comfortable, do a bear call. If stock is like went very high up and then cooling down, um, and if you're confident that it's not going to go above that, maybe a iron condor, then similar strategy, 25 long call and not more than $1,000 or $10 wide call spread, right? So that is kind of what I've been doing, par spread, including bull and bear side, above $250, taking $2,000 risk. So that's like, if I select that, okay, where is the calculator? Let me get to the, anyway, not like, I don't know why it's only showing Zoom and I cannot click here. So maybe because I'm sharing. Okay. So yeah, so that's $250 out of 2000. I think it's 12% gain, 12 to 12.5% gain. That's not bad for me for a day. But as I said, GDT is the most aggressive, risky trades, and I only take when I feel very comfortable making that trades. With that, I'll wrap up today. Thank you very much. Bye bye.